You know what? We're seeing a lot of first-time home buyers get back into the market right now. I don't know if you guys are seeing that right now, but pre-approvals that we've seen sit on the sidelines for the past 2 years, they're back in now. They're looking at it and they're saying, you know what? I've foregone the last 2 years, so now I'm jumping into the market. So I think anybody who's hesitant, I like what you said at the beginning about rates, like fuck the rates.
Yeah.
Said with love.
Yeah.
Okay. But it's like, you don't want to have these short-term decisions impact the short-term information impact long-term decisions. Mm-hmm. Buyers are looking at right now saying, can I afford it? I can afford it. I'm going to buy. And you got to remember too, is like, you know what, like we're seeing a lot in the price point between 650 and 800,000 kind of fly off the shelf right now. And you got to remember, you only need a $35,000 down payment to buy a $650,000 house. You need combined household income of under 150 grand. And today's market with inflation and employment, that's not out to lunch right now. So there's a lot of people in that price point right now that are looking and buying.
Yeah. So, and there's a couple of things too. Well, you've got some extended amortizations, right? That's part of the strategies, right? Yeah. Yeah.
So we are seeing a lot of extended amortizations. We have options where people can go 35, even 40-year amortization still. And one really cool hack that we've seen actually is, I'm sure, who's heard about the purchase plus improvement before? I won't tell you about that again because you've seen that dog and pony show. But one addition we have with the lender right now, which is really cool for the first time home buyer, someone who's getting into like a single family home, and let's say the basement has the bedroom but it needs a kitchen. We have a lender right now that will do a purchase plus improvement for the in-law in the basement, so long as it's a primary residence, and include rental income to qualify for more money. So just to give you an idea here, you've got an unfinished basement. Well, let's just say it's not totally unfinished, but needs another 30, 40,000 bucks. You add that to the mortgage. Now, all of a sudden, before it's actually rented, we could add maybe 17, 18, 2,000 bucks of rental income to it. That's adding another $100,000 in approval amount for your buyer. We had one scenario where that brought someone to 600,000 to 700,000, got a nice house on the Hamilton Mountain, put in an in-law, subsidizing their mortgage payment now by almost 2,000 bucks a month.
Was there a time limit like on the renos or something, or how'd they do that?
It's usually, we encourage people to do 90 days to get it done. There isn't really a timeline, but the reality is that the banks, those tricky banks, they start charging you interest on the full amount on day one. Oh. So if you do a purchase plus improvement, you're paying interest on any money that the bank has held back on day one. So it's incentive for the client to get it done because they're paying interest on the money anyways.
Mm-hmm. And does it have to be a legal duplex, or how's that all fit in?
Legal-ish?
Legal-ish, yeah.
Is that a word? Legal-ish? Yeah.
So they don't care. So they don't care. So you can finish a basement to make it rentable, right?
Yeah, as long as it's, that's as long as it's your primary residence, right? So it's got to look like it can't be like, okay, you go in the front door and then duck under the cookie cabinet and then move to the right and through the back. You know, it's got to be actual side door. You know what I mean? It's got to look and smell like a legal unit, but it doesn't have to be legal because it's a primary residence. And the lenders are kind of like, there's more onus or more safety, more due diligence that typically a homeowner will take on a primary residence. Mm-hmm. That program wouldn't work specifically for a duplex or another rental property, that 100% rental.
Okay.